Hello and welcome everybody to today's webinar presentation, How to Trade Commodity Currencies, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will be going through live market analysis, a watch list of trade ideas, analysis of where we expect gold, silver and crude oil and the commodity currencies to be heading next. We'll be answering questions and of course providing live support as well. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, energy, and the cryptocurrency markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored thousands of traders from all over the world to invest in the financial markets with confidence using our exclusive strategies. For further information on the Gold and Silver Club and our live trading room service, please go to www.jointhelivetradingroom.com. Okay, so let's get into it. Today we're going to be focused on commodity currencies, and a commodity currency is essentially a name that is given to currencies from countries which depend heavily on the export of raw materials for income. So in the foreign exchange market, commodity currencies generally refer to the Australian dollar, the Canadian dollar, the New Zealand dollar, the Norwegian krona, the South African rand, the Brazilian real, and the Russian ruble. Canada produces a large quantity of commodities, including natural gas, timber and oil, and this makes Canada's economy very sensitive to commodity prices. Australia is one of the world's most natural resource rich countries and has large holdings of gold, iron ore, aluminium and also coal, and that tends to make Australian dollar, US dollar quite susceptible to moves with gold. There's correlation between the two. Australia accounts for a third of global iron ore and gold production. So it means that Australia's fiscal revenue is very sensitive to changes in metal prices. So based on that intermarket relationship, the Australian dollar has a very tight correlation with iron ore and gold prices. So when iron ore and gold prices go up, and also copper as well to a certain extent, the Australian dollar, US dollar will go up. And when iron ore and gold prices go down, the Australian dollar, US dollar also tends to go down as well. Canada is the sixth largest oil producer in the world, and this is where you can trade, of course, US dollar, Canadian dollar. About a quarter whose export is oil, and that makes Canada's economy very sensitive to oil prices. So fluctuations in oil prices, they can be traded via the US dollar, Canadian dollar, and often you'll see an inverse correlation. So if oil was to sell off, often US dollar, Canadian dollar will go up, and if oil was to go up, US dollar, Canadian dollar will often go down. So basically you've got a correlation between the Canadian dollar and oil prices, and they tend to move in lockstep with each other. Not all of the time, but there is strong correlation. So if you see a big move on oil, you can often get into that via, for example, US dollar CAD, or sometimes even one of the CAD crosses like CAD Swiss franc or CAD Japanese yen as well. So those can also be traded with the correlation of oil prices. So much like the weekly commodities corner, what we'll do today, we're going to be focused more on the metals, and we'll go over also to oil, and we'll have a look at the commodity currencies. And tomorrow we'll be going through in more detail the fundamentals and what has happened post non-farm payrolls and some of the trade setups as well that lead into that. So with that, I'll take you over to my charts. There's a few trades setting up. We've actually just banked one of our positions on oil, which has just given us a quick 100-point move this afternoon off the back of the oil inventory data, which has been nice. But now we're really gearing up for non-farm payrolls tomorrow. So what I will do, I'll share my charts with you, and you should be able to see that very shortly. So just bear with me as I share my screen. Okay, so right now you should be able to see we are on my platform. So just a quick check-in. Yeah, all good. Thank you very much, Reese. Okay, super. Right. Okay, so we can start off with oil, actually. So oil, we had the inventories data today. We've had quite a significant sell-off following on from the oil inventories data, where we saw an increase in distillates and also gasoline inventories as well. We've actually just banked profit prior to the webinar because we've seen retracements here occurring on the lower time frames, which is occurring right at the pivot, and we can see that starting to set up on the hourly time frame. So you've got this retracement here right around the pivot at the moment. So that's where we're getting a bit of a bounce right now, and you can see we'll probably get a retracement around that zone. That's usually where we do for oil. But it's been a nice sell-off today. We've capitalized on this breakdown in price, taking it pivot to pivot. And often what you'll find is oil, once it breaks through a major pivot or a Fibonacci level, it will follow through until it hits the next level. So probably we'll see a retracement. We might actually get back into oil again later on this evening on a retrace entry, because the anticipation is oil's broken a lot of support today, and we could see some more follow through to the downside. If you have a look at that on the weekly chart, it looks quite bearish at the moment. So I'm looking to capitalize on potentially more sell short opportunities later on in the session. But we just banked 100 points. From a technical point of view, we've got our sell signal, we've got a reversal, we had a bull trap earlier on this week. We hit the upper Keltner channel, and since then we've seen a reversal, break of the weekly pivot, and that's lent into quite a nice quick sell short opportunity here for US oil. So with that, what I would then look at is the potential correlation. So normally when you've got this sort of a movement with oil prices, you can look at overall, I think commodities are generally a bit weaker today. We're seeing also the US dollar was getting a bit of a bid earlier on in the session, so we're getting a bit of support there. You can see you've got a bit of support on the dollar, and that's a point to note as well. So I'm sure a lot of you are aware of this, but because we're trading commodities priced in US dollars, whenever the US dollar is getting well supported, it will tend to also put pressure on also gold, silver, and crude oil. And when the dollar is selling off, that will often also provide support to gold, silver, and oil, for example, as well. So let's move it over and we'll have a look at US dollar, Canadian dollar. And there you go. I mean, US dollar, Canadian dollar is basically broken out above the weekly highs. When oil sells off like this and sells off to the downside, the anticipation is that the CAD will gain strength. And therefore, so US dollar, Canadian dollar, oil down, US dollar, Canadian up. US dollar, Canadian dollar would go up, and then if oil is going up, you'd expect US dollar, Canadian dollar to go down. So that's the inverse correlation. So with oil selling off like this, you would expect what we've seen here, a breakout on the US dollar, Canadian dollar to the upside like we're seeing at the moment. You can see we're sitting around the neckline right now, weekly pivot and so forth. But I would be looking at, if you were long there, taking profits around that zone right now, because we're starting to see a bit of a retracement for oil, and this will be quite a big mover tomorrow. Not only do we have non-farm payroll data for the US, but we've got data coming out from Canada as well tomorrow at 1:30 London time. So we could see some big moves. Now, other trades that I've got on the watch list going into tomorrow are Australian dollar, US dollar, and my overall sentiment for this at the moment is it looks like a long. So I'm looking right now, based on the information I've got at the moment, I'm looking for this. I'm looking for a breakout higher on non-farm payrolls tomorrow, but I won't get into the trade until after non-farm payrolls and only on confirmation. There might be a short-term retrace entry, but you need to be in and out of that before non-farm payrolls. But basically, what you tend to see on the Australian dollar, US dollar, is it correlates with gold, and it will also tend to correlate with copper as well. So gold today has broken out. It broke out above $1,200. It's retracing a bit at the moment on the dollar strength, but overall, we've broken out from a bull flag formation. We've seen a breakout today. I think the daily high is around 1206 today, and we have seen a breakout of this bull flag continuation pattern and a bit of a retracement here as we've got a bit closer towards the end of the session in the UK. So ultimately at the moment, gold looks like it might go higher pre-non-farm payrolls. It does depend on how it closes, and it also does depend tomorrow as well on the non-farm payroll data. But the way I would look at that, my short list for tomorrow for non-farm payroll is Australian dollar, US dollar. If that gets a breakout, if the US dollar sells off, that will be quite a good opportunity. And I'm also looking at a potential long on the New Zealand dollar, US dollar. Bear in mind that if we get an escalation in trade war tensions, the first commodity currency to get hit are Australian dollar and the New Zealand dollar. So for part of a trading plan, what I would look at, and it's worth bearing in mind, again, I'm sure a lot of you are aware of this, but if you can just be abreast of major news items which we're seeing at the moment with respect to the trade war tensions. We saw this again last Thursday. Anytime Trump comes out with additional trade tariffs, be it China or he's putting additional trade tariffs on, we've seen he's putting some pressure recently on Turkey and prior to that Iran and Russia as well. Every time this happens, the major reaction in the market is US dollar strength, and the commodity currencies also get immediately hit. And that's what we saw that sell off last week. And what you want to look at is shorting the Australian dollar, shorting the New Zealand dollar, going long the US dollar. You could go long via US dollar Swiss franc or US dollar CAD, or just go long the US dollar directly, or sell short the commodity currencies. Normally copper gets hit, gold gets hit, silver gets hit, but one of my favorite trades is just to sell New Zealand dollar and Australian dollar on trade war tensions. When the markets are quiet like this, like we're seeing at the moment, we're now getting supported at the lower Keltner channels. I have the beginnings of a buy signal on the New Zealand dollar and the Australian dollar. We'll look at this again tomorrow on the Commodities Corner special, the non-farm payroll special. So do make sure you join us for that tomorrow as well at 3:30 London time. But at the moment, I'm seeing some potential upside here on those crosses, okay? So those are on the watch list. Euro, US dollar as well, not quite as well supported. It's more the commodity currencies because gold is getting a good lift at the moment. We've seen a breakout today back above the 1200 zone. I'll be interested to see if gold does close back above 1,200 US dollars per ounce today. And we'll be watching that quite closely right into the close as well. Okay, so that's Australian dollar, that's the New Zealand dollar. So again, what you want to bear in mind is the Australian dollar correlated to gold. So if gold continues to break out, the Australian dollar would very likely do so as well. It's not 100% correlation, but there is definitely correlation. And generally speaking, let's say, for example, your view is shorting gold. If you're looking to sell gold or silver, then really that marries up that your view is you're saying that the Australian dollar, US dollar, and the New Zealand dollar, US dollar would likely go lower as well because there will be correlation. So just bear that in mind. And if you're looking to go long gold, normally you wouldn't look to short the commodity currencies because they will also get a lift as a result as well. Now let's move over and have a look at silver as well. I mean, silver is actually bouncing off the $14 level, broke out earlier on in the session. Silver has been quite incredible because the gold to silver ratio this week hit 10-year highs of 84:1. So if you own or owned an ounce of gold, for example, right now would be the optimum time at the moment to go and exchange that for 84 ounces of silver. So about a week and a half ago or 2 weeks ago, that would have got you about 80 ounces. And about a month ago, you would have been able to get about 78 ounces of silver for 1 ounce of gold. But right now, for gold investors, they can exchange their 1 ounce of gold, or they might have much more gold than that. But each ounce that they exchange of gold can get them 84 ounces of silver. And we haven't seen such an extreme in the ratio for 10 years. And that's very significant because often the ratio will not stay like that for long. There's a reversion to the mean, and silver is so oversold at the moment around the $14 level. It doesn't mean it can't go lower before going higher, but soon, I'd say imminently, silver is probably going to get this capitulation move. It's whether it needs to break down back below $14, get back to $13.50 or $13 before it has that move, or whether we've already seen the low get put in for silver. But certainly the gold to silver ratio is the highest it has been in 10 years. It's not a bad idea if you own gold and silver at the moment. You might want to take advantage of that ratio of just exchanging some gold for silver, and then you can always exchange it back again once the ratio starts to reverse. It gets back towards the 70:1 level again. Okay, so where we're at right now, very extreme with the gold to silver ratio. Let's also just have an overall look at platinum here. Platinum, yeah, I mean, platinum's looking still quite strong today. I'm looking for, it depends how it closes, but a potential move back towards $800 tomorrow if we close strong. I could see a 3 white soldiers formation and a move back towards a weekly pivot. So I would look out for that on the overall platinum price structure. Yeah, I'll definitely keep an eye on that. There is potential for that to occur here on platinum. If we do get breakout and follow through to the upside, we could get a move back towards a weekly pivot and the monthly pivot there too. So platinum is on the watch list. Palladium as well. Palladium broke out to the highest levels in 9 weeks this week. It is getting a bit of resistance at the upper Keltner channel. It's not a surprise to see a bit of profit taking at that zone. But generally speaking, Palladium has been leading the move. Back in mid-August, Palladium sold off 7% in 1 day, recovered that within just a couple of sessions. So it's had quite a fast retracement there for Palladium. US dollar CAD again looks quite strong off the back of the oil sell-off that we've seen today as well. Oil, I think, is probably done for today. It's starting to retrace around these levels, so we're seeing a bit of a retracement just around the 67 zone at the moment. So probably just we may hold on to that level, but I would be looking for the potential to roll over again tomorrow and then break back down. If it does do that, starts to roll over, we may look at a retrace entry on oil here to get back in for another sell short tonight. So I would keep that on the radar too. We can have a look at that on tomorrow's session as well. And we can also have a look at just see if any of the other crosses here are looking any good. Yeah, the Australian dollar, New Zealand dollar. That was a buy earlier on this week with bank profits at the pivot, and then we've seen just a bit of a reversal. Neither here nor there at the moment. Generally, we're pretty light on Forex now, going into non-farm payrolls tomorrow, and it's more the commodity currencies. My watch list tomorrow is certainly going to be oil, where we just banked a day trade on oil for 100 points. I'm going to be certainly looking at gold, potential for a breakout. Depends how it closes, though, today. Potential for a long on Australian dollar. I might look at a long on the US dollar if non-farm payroll is strong tomorrow. We look at a potential long opportunity there. I've got the New Zealand dollar on the watch list as well for a potential long. I also like to sell short on the euro pound as well. So we're still looking at that. That will be less affected actually by non-farm payrolls tomorrow. And pound US dollar as well, I like for a bit more upside short term, just based off the momentum yesterday from some of the positive sentiment from the Brexit news yesterday. So those are really the main trade ideas that I'm looking at as we go into tomorrow's session, guys. So I hope that helps a bit. Platinum as well, I'm looking at potentially for a bit more follow through on platinum overnight and tomorrow too, ahead of non-farm payrolls. Okay, what I would suggest, if you want to get just a bit more of a detailed report as well, some of you may already have watched this too, but if you want to get a more detailed report, you can just go over to our YouTube channel. We've just put together a report on gold and silver, which has just gone live today. So feel free to go over to that. Make sure you subscribe to our YouTube channel. And from there, you can watch the metals report. We'll be putting out a post report as well over the course of the weekend, but also join us for tomorrow's webinar on binary.com, which will be the post non-farm payroll session. So do make sure you do that. And of course, if you want to join us at the Gold and Silver Club, join our live trading room program. Essentially, you get access to all of our live trade alerts. So those are delivered by WhatsApp, email, and SMS. You've got access to mentorship, expert advice, in-depth market analysis, and trusted insights, so you can know earlier how to act quicker and maximize on each trade opportunity. So all you need to do to make an application is just go to www.jointhelivetradingroom.com. That link is also below all of our YouTube videos, so you can either click on the link below there or just type it in, www.jointhelivetradingroom.com. We will be doing a pre-non-farm payroll session tomorrow. So if you want to join us for that, we could probably get you enrolled ahead of that, but you need to join either this evening or first thing tomorrow morning to join us for that. And again, just make sure you go over to our YouTube channel and also subscribe to our reports there as well. Okay, fantastic. So I think that's it for today's session on the commodity currencies. I hope that helps, guys. I hope that gives you a bit of clarity as to what we're looking at, some of the trade ideas that we're looking at. Thanks again to Binary and Sharice for putting on today's session, and we'll catch you guys on the next one. Okay, thanks everyone. Take care, all the best, and of course, good trading.